I'm a serial entrepreneur. I am the CEO of Issuance. We are developing a capital formation platform that helps issuers raise capital from investors. And interestingly and uniquely, we pay investors to review and diligence deals. We've also marketed a number of security token offerings. We've worked with Kodak Coin, T0, and Agenus. I co-founded CrowdFundX. We cut our teeth marketing Reg A Plus IPOs to NASDAQ, NYSE, OTC Markets Group, and we rolled that up into Issuance. And I'm creating a reality series called Going Public, where we follow a number of Reg A Plus IPO issuers on their journey to NASDAQ, and that's going to be distributed on one of the largest business news networks in the country. And for those of you starting a business, the keys to business success: never give up, be persistent, and focus on one thing, do one thing better than anybody else. So this session is a quick one, and it's security tokens, fact or fiction. And so I'm going to kind of fact check myself, because I came here 6-7 months ago talking about digital securities or security tokens being the next mega trend in capital markets. This was in fact a slide I presented. This was really a thesis at the time. What is the value proposition for a company raising capital through a security token offering, and what's in it for investors? And so you've probably seen this thesis before, the idea that there's secondary liquidity, 24/7 trading, fractionalization. This was the value proposition, and there's been a lot written about this. Last week I got referred to a company that is adamant to do a security token offering, and I said, have you talked to any tokenization platforms? You've got, Securitize, Polymath, Harbor, others. And they had talked to one of the leading platforms, and the platform apparently told them that their clients are raising $20 million on the low end, and sky's the limit on the high end. So if, imagine hearing that, you would think, man, this is the way to go. I'm going to do a security token offering. Well, here's the reality. Most security token offerings are failing to fund. So most of the companies trying to use this new technology, this new strategy to raise capital, are not raising capital. There's a surplus of early stage deals. So the majority of companies attempting to raise capital through security token offering are early stage, high risk startups or distressed assets. Okay, there's a surplus of those types of issuers. In reality today, there's very little liquidity in the secondary markets. Now, maybe we shouldn't have expected, and I don't think anybody expected, that digital securities were going to trade like shares of Apple the minute there was a security token exchange. But the volume for the handful of security tokens that successfully raised capital listed in our trading is somewhere between $0 and $10,000 a day. Now, maybe again, that's to be expected. This is a new nascent industry. NASDAQ wasn't built overnight, but there's very little liquidity on these secondary trading venues. The momentum, right? Who are the companies raising capital? It's the infrastructure companies. And infrastructure is primary issuance, compliance, cap table management, capital raising, and secondary trading. That's the insiders, okay? It's an infrastructure, there's infrastructure momentum. And by the way, those companies are not selling security tokens for the most part. 95% of the infrastructure companies are selling traditional equity, because that's what most investors want. So this is kind of the reality of where we're at today. And this is just a quick chart I put together. This is where I'm seeing the demand in this industry. The demand is squarely in infrastructure companies. Again, secondary trading. If you're building a security token exchange, there's probably going to be interest in your deal. If you're doing a primary issuance platform, there's probably going to be some interest in your deal, even though I think it's a very crowded sector. There's talk about tokenized real estate. You see press releases for that. There's talk about tokenized VC. You see press releases for that, but I didn't put those in the bullseye, because I don't think those deals are actually raising capital. I think companies are telling people they're going to raise capital, but there's very limited investor demand for those deals right now. If you are not any one of those businesses, you've got some business that does $50 million a year and you want to do a security token offering, you're outside the circle. There's zero demand for your deal, okay? So if you are not in that circle, the chances of you failing are probably 100%. And that's just how I think that it's going down. So this was a piece of feedback I wanted to share. We got this from an investor. We're advising a tokenized venture fund that has venture capitalists as principals, real savvy investors, good resumes, and part of their pitch is that the LPs putting money into this fund are going to be able to trade out. There's going to be this liquidity. And the family office did a due diligence review of the deal. And they came back and they had a long list of feedback for why they passed. But they said the view is that this secondary liquidity is an attractive future feature, that instead of taking additional risk now, it was viewed as a feature for a future investment, meaning that family office would rather buy the digital securities on a secondary trading platform than take the risk now. So it's really interesting what happens when you push that thesis of liquidity. Sometimes say, great, call me when you're liquid. Go raise your money from somebody else other than me. And when you've got all this liquidity and disclosure, maybe I'll be a little bit de-risked then. Quick deal analysis. We're working with a publicly traded company called Agenus. They are a NASDAQ-listed biotech company on the East Coast in Boston. They've been publicly traded for maybe 15 years, $300 million market cap, and they develop innovative immuno-oncology cancer treatments. That means they're using the immune system to attempt to fight cancer. This company was willing to take a risk, and they're pioneers. They're running a security token offering for one of their drugs, their lead cancer treatment drug. And this is the first publicly traded company in the US to do such an offering. The challenge that this company is having is that when they go out and they talk to some of you guys like you in this room that might know the digital security pitch and value prop, I bet you don't understand how molecules work, and you probably never will or have an interest. So the crypto guys in the digital asset funds do not understand molecules. There's no way for them to evaluate this deal. The institutional investors need to be sold on the value prop of security tokens. That's the easier sell. So this deal was announced maybe 2 months ago. We're working on it. Atomic Capital's in the deal. They're doing tokenization. In success, we think this could be game-changing. But there's this struggle because, again, this is out of that circle, and this is a hard sell, right? The industry guys don't know biotech. The biotech guys don't know tokenization. So it's a bit of a struggle. I think some of the basic solutions for how this industry grows are to educate investors. Investors have to buy into the thesis of digital securities more than anybody else. The issuers are clearly excited about the opportunity to raise capital, but if investors don't buy it, if there's no gain for the investors, then it's irrelevant. I also think that this industry needs to decouple itself from Bitcoin and crypto. I think traditional investors hear digital securities or security tokens and they have some instant perception that this is somehow tied to Bitcoin or cryptocurrency, when in fact it is not, and that deters them from even looking at the deal. I think we need more publicly traded companies like Agenus to come to market, and those pioneering issuers are really the ones who are going to set the trend and drive true institutional adoption. And issuers have to offer favorable terms. I said this 6 months ago, and I say it every month. Investors have to win. If investors lose money buying security tokens, this industry is done before it starts. Investors have to win. My forecast, I think tokenization is going to zero. It's surprising to me that there's a dozen companies that are all competing in the tokenization space. Now think about this for a second. If one of the value propositions of digital securities is supposed to be that this is somehow faster, easier, and more efficient, the idea that there's a tokenization process that has a time component and a cost component flies in the face of that efficiency. So I think that tokenization is already becoming commoditized. I think it's already generic. And I think the providers that can offer tokenization at low to no cost and have it work will win. The market hinges on investors making money. If investors can make money buying, trading digital securities, we will see the industry grow. I think there's going to be consolidation beginning next year. All of the infrastructure companies today, 80% of them will be gone. Most of them will have failed. A handful of them will have been acquired by larger businesses. And last but not least, I think brand builders will win. There's so much focus in this industry on the technology and the blockchain components of the business. But in reality, most of the companies in this room and in this space have brands that nobody knows about. if you are not in this industry, you've not heard of T0, you've not heard of Securitize or Polymath. These are brands that have a reputation in a very niche and nascent industry. So from my perspective, the companies that can actually figure out on the marketing side how to build a mainstream viable brand and create awareness, a mainstream awareness for their company, will win. Thank you very much.
We have time for one quick question.
Quick question. Yes.
On the Genus asset, assuming that's a late-stage asset that the existing shareholders...
Can you ask that question again in the mic?
On the Genus asset, assume that's a late-stage asset, phase 3 in development or something, and that would be then having been supported by the current shareholders. So that's going to be effectively a dilution to the current shareholders. How would the current shareholders accept that, or are they even required to accept it? One, and two, for the people who do buy into that, is that only for that aspect? So if that asset fails, say phase 3 and doesn't get market approval, do they then have
That's
anything?
correct. So the beauty of this offering for Genus is that they're able to take one of their 16 cancer treatment drugs, isolate it, and allow investors to make a bet. Okay? And their traditional option, if they wanted to do that outside of this industry, is to do royalty financing, whereby investors finance a particular drug, and then those investors are entitled to a royalty on future sales in perpetuity, which doesn't necessarily benefit the issuer. In fact, it's perceived quite negatively. So the CEO wanted to explore this offering as a way to fractionalize, isolate one asset. The bet the investors are making in this deal is that this drug, which is a category PD-1 cancer treatment drug, if it receives FDA approval, investors will end up getting a 7x return on their money. The other 6 PD-1 drugs across the industry have all been FDA approved. So this is the 7th drug that's going up. It's very close for approval. So that's the bet. There is some concern from existing shareholders. There is some dilution to the common stockholders. It is nominal, but it's really a pioneering deal, and you can take a look at the deal on the Atomic Capital platform.
All right. Thanks so much, Darren.
Thank you, guys.
Do you have a question to have them think about?
Question to think about. If you have been considering running a digital securities offering or security token offering, the question is why? What is the perceived edge that you think you're going to get with that offering? And if you are determined to do that offering, do you fit in that circle? And if you don't, should you really be doing a security token offering?